Everybody, welcome to another day of Market Report brought to you by Mike Bjork. Today's Monday, February 2nd. Hope you guys had a great weekend, enjoyed the Super Bowl. Kind of crazy game. So, hey, I wasn't a fan of either team, but I thought it was a great game overall. It was fun to watch and exciting, especially at the very end. But hey, just jump right into it. We got quite a few economic news releases scheduled today, and we'll start off with the personal income for the month of December. So, last reporting was back in November. It was at 0.3%. Forecast was supposed to be the same, and basic given that forecast. So personal income, no surprises there. Consumer spending, we had an increase of consumer spending in November, but December forecast was projected to contract, and it did contract at the forecast. So again, no surprises. And then we got the core inflation, or the core PCE. This is the Fed's favorite gauge for the inflationary numbers, and when you get the core, you stripped out food and energy, which creates the volatility. So we had 0 in November. December forecast was 0. Basic came in. Again, no surprises. And again, this is one of the reasons why the Fed is very concerned about possible deflation versus inflationary pressures right now, because we're not really getting a whole lot of stimulation or growth in the economy and such. Now we got the market PMI. This is manufacturing numbers for the month of January. So we had a 53.7 back in December, and it jumped only up to 53.9. So not a big jump, but it did show a little bit more improvement in January. On the other hand, we got the ISM for the month of January, and that one's a negative number. We had a 55.1 back in December, and we were supposed to contract slightly to 55 and then contract all the way back to 53.5, which is kind of the biggest jump that we've seen back since 2009. So this has kind of rattled the markets a little bit, this kind of surprise. And then on the other hand, we got construction spending at negative 0.3% back in November, and it was supposed to expand a little bit to 0.7 and expand up to 0.4%. So stock market has been up and down so far this morning. It started up primarily because the barrel oil rebounded up to $48 a barrel, and then it kind of pulled back after seeing that manufacturing ISM number. It didn't like that very much, and now it's trying to work its way back up again. So it was down, and then it came back up again. So it was even down as much as almost 100. It was like over down. The Dow was down over 90 points this morning, and now it's rebounded and so far up about 48 so far this morning. Right now we're on the 3.0 Fannie Mae 3% coupon, so we were using 3.5. Now we're at 3. This is kind of reflected more of where the interest rates are at. So we're down currently from where we left off on Friday, but we're still at a nice little pace from where we've been. So we're kind of in the high range where we've been kind of trading on the bond market, as you can see here. And right now we're about 7 basis points. So the pricing did worsen slightly, a little bit from where we were on Friday. So we'll have to kind of wait and see how things kind of progress today. But so far the market's kind of moving upwards. They did like the oil numbers, which seems to be kind of winning out so far. All right, folks, you guys have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. And look forward to seeing you guys tomorrow. Thanks again. Bye.